Eric Usher heads the UN Environment Programme Finance Initiative, UNEP FI, a global partnership bringing together the UN and international banks, insurers, asset managers to develop sustainable finance and responsible investment agendas. Over the years, UNEP FI has established some of the most important sustainability-oriented frameworks within the finance industry, including the very well-known Principle for Responsible Banking in 2019. Prior to leading UNEP FI, Eric has over 20 years of experience in the low-carbon sectors, spanning technology commercialization in Canada, solar rural electrifications in Morocco, and financial sector development across emerging markets. He was also the editor of the Global Trends in Renewable Energy Investments report published annually by Bloomberg. Lastly, also now working from Geneva, I was told Eric is originally from Montreal. It says to me that this encounter was simply meant to happen today. Merci Eric, thank you. The virtual floor is now yours.
Thanks very much, Pascal, and a pleasure to be with you all this morning, this afternoon. And it's always very great to be able to speak just after Bertrand Piccard, because he lights up the room in the world of the possible. And I would, just as an opening comment, and I'm going to give a little bit of a history in terms of the responsible banking or responsible conduct within the banking industry in recent times. But I would like to say that one of the, I'm quite amazed, the transitions we are seeing is most recently the typical risk orientation, which is how a financier normally looks at sustainability issues. We're actually seeing that being overtaken by the opportunity. And essentially, it's a little bit of Bertrand, which is getting, I don't know if you call it under the skin or into the heart of financial actors. And quite seriously, we are seeing in places like Japan and Korea, where the big banks there are mostly serving the Keiretsu and the Chaebol, the big industrial groups. These banks are realizing that they need the tools to help their clients transition. And it's about that transition where there is opportunity to get sustainability outcomes, but also to build new business. And in today's low interest rate environment, finding new sources of competitiveness is key. And really the sustainability is seen as a path to prosperity. I'm going to talk to you a little bit, the title of my talk will be around the question of, are we entering a new age of responsible banking? It's a little bit preposterous, if I can say. What is a responsible bank? And I'll explain a little bit it's really around this notion of impact and understanding not only the risk return profile or aspects of a financial transaction, but also the impacts involved, both positive and negative, being better at managing impacts. And eventually, once you have the tools, going towards being able to align your impacts at the portfolio level with society's greatest challenges. For instance, those laid out by the Sustainable Development Goals, the Paris Objective, etc. In many ways, these developments that I'll talk about are bringing commercial banks closer to your own mandates. Essentially, it's adding a stronger policy dimension to their normal commercial undertaking. And so in that, I think maybe it's also making them stronger partners to work with you in grappling with climate and the other big issues. So we, within the UN system, we've been around actually since 1992. We were formed when a couple banks and insurance companies attended the Rio Earth Summit, if you remember that, back in 1992, and they realized governments were starting to talk about this new notion of sustainable development, and they needed a platform to be feeding in and learning from this. They established the UNEP Finance Initiative. We mostly, our membership is representatives of larger banks and insurance companies and a subset of asset managers I'll speak about shortly. The recent history, mostly it's commercial actors. I'm very pleased, actually, BNDES is one of the state-owned banks, and we really appreciate Gustavo and his team's participation as such an important player within the Brazilian market. But most of the actors we're dealing with are the commercial actors. terms of recent history, we typically talk about the 1990s as things really got going in terms of banks within the financial systems, banks being the first to realize that they needed systems in place to monitor for environmental risks and later social risks, and to put in place teams to manage those risks. We had, with the World Bank Group and the IFC performance standards, the establishment of the Equator Principles, which are applied to project finance. Many of you might be aware of. However, it was really not until, I would say, 2007, and in that year, we had commissioned a legal review came to be called the Freshfields Report, named after the legal firm, which for the first time established that it was okay to take environmental, social, and governance issues into account in investment decision making. Now, that's what led to the establishment of the Principles for Responsible Investment that year, launched by UN Secretary General Kofi Annan and a group of investors at the New York Stock Exchange. Today, the PRI has grown to nearly 4,000 signatories. About 80% of institutional investment is now operating under that framework. So it's the framework, how they implement environmental social governance issues, principally from a risk perspective. We did the same in 2012 for the insurance industry to establish principles of sustainable insurance. But really, it was a risk agenda until 2015. And that was when 195 governments came together to ink the Sustainable Development Goals, and just after the Paris Climate Agreement. The financial sector was quite involved, particularly in the Paris Agreement, for the first time realizing what governments were going to negotiate within a UN platform actually was going to affect how they do business. And more or less the financial sector sent supporting signals to their governments in the lead up to Paris, saying, we believe in financing a low carbon economy. That's a route to growth. It's not a route to essentially massive job losses. Of course, Nicholas raised the issue, and we need to consider a lot of issues around the transition, but roughly the financial sector was getting on board to this shift. At that point, the question was, where the banks are or were at that time, were they fit for purpose for addressing this shifting dynamic? And I think much of the pressure up until that point had been coming from civil society, who play a very important role in terms of, I would say, holding banks' toes to the fire. But post 2015, you started to get the investors to the banks, the regulators, the customers, the staff. Everybody started to challenge the banks, and they realized they didn't have a framework that was strategic in nature, really fit to the whole of the organization. They had a lot of principles and frameworks on how you do transactions, particularly in a risk-aware manner, but they realized it was bigger than a transactional consideration. It's something that had really become strategic. And this is what led in 2018-19 to a group of banks that we convened to draft the UN Principles for Responsible Banking, which was launched with UN Secretary General Antonio Guterres in September 2019 with 132 banks at the time. Now that framework, if you look at it, I think mirrors the changes we're seeing in general with the private sector and within the financial sector. It's no longer a risk framework. Risks absolutely are important, but it's a framework around impact and alignment. And I'll quickly explain. It's 6 principles. The first one is the most important. Essentially, it says we will endeavor to align our businesses with the needs of the individual as defined by the Sustainable Development Goals, the Paris Agreement, and other relevant frameworks. So it's really about the purpose of the organization. You know, we were still 10 years after the great financial crisis, and the purpose of banking is still something that's out there. As we know, banks and financial services are some of the least trusted parts of the economy, and therefore banks are trying to grapple back. What is their sense of purpose? What is their role in the economy? The second principle is around putting in place systems to monitor impact and to establish targets to make improvements in critical impact areas. I won't go into more details on the specific principles, but essentially when a signatory signs these principles, what they need to do is put in place systems to monitor impact, and that at any point in time have at least 2 business targets to address key impact areas. Now, a very common one will be climate, but there's also many other areas like gender equality, like access to finance, like biodiversity, like human rights and more. And then the signatories have to implement and show progress. They need to report on progress. They actually need their progress to be assured by third-party assessors, typically the big five consultancies. Then the signatories, as they've defined their impact areas, they're grouped into common areas and they work together to define the guidance. How do you measure impact? What does it mean to have a balanced approach to gender equality, for example, to circularity, to access? Today we have 220 banks who have signed. That's a little over 45% of global banking assets are covered. So you can see that it's mostly the larger banks. Goldman Sachs was the latest big bank to sign. Interestingly, of the Bay Stream banks, which are the big banks in Canada, Bank of Montreal, here's the Montreal emphasis, has been the first of the Bay Stream banks to sign up. 9 out of 10 of the largest banks in Europe are signatories, 7 out of 10 in Latin America, 4 out of 10 in Asia, and henceforth. So it's a global framework, and the strength really, it's really like a UN of the banking industry. In terms of the SME focus, as you would know, SMEs financing is a very important area for some of these commercial institutions. Almost all of them obviously work with SMEs, and there's a real strong opportunity, I think, to be collaborating potentially in some of the areas where they're setting targets. 3 of the areas I would mention, one is on financial inclusion and access to financial services, an area you would know very well, an area where for micro, small, and medium enterprises, we're told there's an unmet financing need of over $5 trillion annually. About half of formal SMEs don't have access to formal credit. These are figures you would know well, and obviously the opportunity for commercial banks to improve their access and support to SMEs in this area is really important. Gender equality, as we know, the credit gap for formal women-owned SMEs is also very significant, estimated at about $3 trillion globally. And obviously there's differences by region, but everywhere we have a gap and we have work to do. A lot of the barriers are not only financial, as we know, there's also a lot of non-financial barriers related to training, and also in terms of early stage startup financing of the type that Bertrand was speaking to earlier. And then, of course, for SMEs, there's a lot of opportunity in green solutions, in terms of financing for solar, for energy efficiency improvements, sustainable agriculture, circular economy. And one of the distinguishing features of most sustainability changes, and particularly for climate, is the clean solution is almost always more capital intensive and typically much less OPEX intensive than the dirty solution. And so as you get down to the consumer level, or even at the SME level, often the banks are actually not even aware of the financing needs of SMEs, because traditionally the SMEs have been using technologies that haven't actually used financing. It's operation cost intensive, it's in the fuel, and therefore the banks don't even have the information to know what the market opportunity is to be financing clean solutions in that area. So we've seen a real uptake of interest in these various areas. I think a lot of them align with the types of priority areas you're working on. I'm just going to finish off to spend a few minutes around the race to net zero. The race to zero in a climate context. Interestingly, in 2019, UN Secretary General Antonio Guterres, he made a very important decision. And post 2015, there was a lot of progress made in terms of green finance, green bonds, financing for renewables, Teslas of the world. But mostly this was still an add-on, so a sidecar to business as usual. And in 2019, Guterres came out and said, now it's about a holistic approach. We no longer want to hear about your next green bond. We want to hear about the whole bond portfolio and what are your plans to green it over time. We don't want to hear about financing for the next renewables project. We want to hear about all of your energy sector financing and what's your plan to decarbonize that sector over time. It's not a call to divest overnight, but it's a call to provide forward guidance and the role of the financial actor to essentially say, we are in this race. We see the need to help decarbonize different industries, and we're actually going to be leaning in to assist our clients to make that transition rather than waiting for it to happen and for others to take the active role. In 2019, with the PRI, we launched with a group of major investors what's called the Net Zero Asset Owner Alliance. So today it's 35 large investors like AXA in France and Allianz in Germany and CDPQ in Canada and CalPERS and various others. It's a total of about $6 trillion in assets who committed to getting their portfolios to net zero by 2050. Now, as we've seen since then, there's been a real scale up, and to be perfectly frank, setting such a commitment, I'm not sure means that much because it's not something we personally deal with, it's the next generation. But much more concretely, this group said to get the net to 2050, we're going to base it on the science. We're going to use the IPCC and its scenarios to figure out what does that mean we need to be at in 2030 and in 2025. So essentially, what do we need to do today to be on a pathway to net zero by 2050? In January of this year, they released their protocol, which essentially is the basis on which they set 2025 targets. That protocol indicates that already in 2025, they need to reduce their portfolio emissions between 16 and 29%. That's quite significant for the scale of these mainstream investors. The way they want to do it principally is through engaging with their clients, and to Bertrand's comments and also those of Nicholas, it's not only about financing the new Teslas. Granted, there will be some new Teslas, but a lot of it is about how do we engage with market incumbent actors to get them to transition. So really, it's voting the shares and being active owners rather than divesting in capital markets where typically someone else might pick up those shares and maybe not be as green as inclined. On the back of that work from these investors, more recently, you will have seen there are a number of other initiatives. We are about to release a similar program with insurance underwriters. As we know, in some markets, public equities or public investors actually start to have less influence on industry, particularly those in decline, but you still need insurance, for instance, to operate a coal plant. And so an insurer can have a lot of influence on a coal operation when maybe an investor no longer has. We're also working with a group of commercial banks who will shortly launch a similar program for commercial banking on how they're going to get to net zero and work with their customers to do it. So the driver really is about helping clients decarbonize. And if we look at every industry, transport, energy, food, cement, steel, building construction, and more, every industry realizes today that they have to start this transition. And I think the key question for the financial sector is, are you going to be an actor in helping them make the transition, or are you going to sort of hold your stance in a way that maybe prevents the changes that might be required? And I really think the financial sector has a real role to play. Here we have the banking community, but also the wider financial community, who are getting much more engaged, I guess, with this policy orientation. Largely, I think, to what Bertrand said, it is in their commercial interest to understand how society is going to be changing and to figure out how to align financial products and services with those changes to help the clients get there. That's where future prosperity lies, and that's where they want to play a role. I'll stop at that.
For your presentation, extremely insightful. I see people taking notes. I like this. And somehow, I think that with the Montreal group, we'll stay connected somehow and see and explore other areas of collaboration for sure.